2018 has seen what has seemed to be the beginning of a trade war. The US has raised tariffs on a large number of its imports, and it's threatened to do much more. So where do things stand? President Trump's trade war affects two of the world's largest trade flows, between the US and China and the US and EU. Together, these trade flows make up more than a third of US trade and 8% of world trade. Last year, the US imported $505 billion worth of goods from China, while China's imports from the US were worth $130 billion. In March, the US raised tariffs on steel and aluminium imports, affecting around $3 billion worth of its imports from China, and China retaliated. In early July, the US also raised tariffs on $34 billion worth of imports from China over concerns with China's intellectual property practices. China retaliated again. The US was already preparing to raise tariffs on another $16 billion worth of imports from China, but following China's retaliation, it began preparing to raise tariffs on another $200 billion worth, and a further $200 billion worth could follow. After raising tariffs on its imports from the US, China could raise non-tariff barriers like product standards or reduce holdings of US treasuries. It could also seek to reduce tourism to the US. Total US imports from the EU were worth $435 billion last year, and EU imports from the US $283 billion. The US steel and aluminium tariffs affect around $7 billion worth of its imports from the EU. In retaliation, the EU has raised tariffs on $3 billion worth of its imports from the US, including bourbon, motorbikes and jeans. Tariffs on another $4 billion worth of imports will follow if the US keeps its higher steel and aluminium tariffs in place. The US is now preparing to raise tariffs on imported cars and parts, but the deal struck by Presidents Juncker and Trump might mean that the EU's exports to the US of cars and parts, worth $50 billion, may be exempt. China and the EU aren't the only trade partners affected by President Trump's trade war. The US steel and aluminium tariffs affect $44 billion worth of US imports in total. Adding to that US tariffs on imports from China, so far in the trade war, the US has increased tariffs on $78 billion worth of its own imports. Retaliation from the US's trade partners means that $58 billion worth of US exports are also facing higher tariffs now. An additional $687 billion worth of US imports are threatened with tariffs. And if the US's current threats are carried out and trade partners retaliate, another $368 billion worth of US exports will face higher tariffs. If the cycle of retaliation and escalation continues, we could see the US trading tariffs on all of its imports and facing retaliation on all of its exports. The share of world trade drawn into the trade war would increase from 1% to 22%. The majority of world trade is still safe from the unilateral actions by the US. However, in a world of globalized supply chains, higher import prices there can have knock-on effects on import prices elsewhere and on trade volumes. Effects on business confidence and financial markets will also mean that the effects on world economic growth will be much larger than the direct effects from trade.